Alright, what's up, everyone? I just wanted to quickly talk about my approach to valuing cars on the balance sheet and just minimizing liability. So, something that I've heard a lot is that buying a car, especially when you're young, is like one of the worst investments you can make. But I don't necessarily agree. I'm not going to sit here and argue that it's a good investment by any means. It's never going to generate positive cash flows. But there are ways to minimize liability, and if it is something you need, it doesn't have to be as expensive as people make it seem. So the first thing that I do when I try and value a car is that I just need a bunch of data. So this is the car that I bought, and basically what I would do is just go on Carfax. Um, I would go like 200, 500 miles and just find a bunch of different cars, what they're priced at, their mileage, and the year, and just create like a big data set with as much as I can, as much data as I can with cars that are similar to the one that I'm looking at purchasing, and then comparing that to other cars that I'm purchasing, and sort of just discounting like the negative cash flows, how much I'm going to spend, and how much I expect it to depreciate, and then creating like a value, like a fair value for that, just using how much it would depreciate and how much I'm going to spend on it. So the first thing I do to value or to create the data set is I want to make sure that there's no accidents and that it's for personal use. So there's no like rental vehicles and just that there's no accidents because that brings down the value a lot and it also makes our algorithms a lot less accurate. And then I would just go ahead and take this and put it into this data set that I have. And yeah, so it would have three features, just the year, the mileage, and then like the target variable, which would be the price. And then I want to do that for a few different cars, is what I did when I bought my car, just to compare how much I would spend on, or just to compare which car would make the best investment and lose the least value, if that makes sense. So once you have a data set like this set up, and preferably for a few cars, you can set up a really easy, quick algorithm just to try and predict the price and see how accurate it is. So here, I just created a few graphs to show the correlation between price and year and price and mileage. It's pretty obvious as the car becomes older, the value goes down. As the mileage goes up, value goes down. And so here I just tried a bunch of the different scikit-learn models. I didn't do anything advanced because I didn't really feel like it. And it is fairly accurate, so it's like an 86% R squared score. If you do want to do something more advanced, like a more accurate algorithm, reweighing or a different type of neural network, you can do that. Just the one thing that I would caution is just to make sure that you do some sort of cross validation analysis, just to make sure that your algorithm isn't overfit on the data, if that makes sense. So the one thing I found for at least this model, the C117 Mercedes, CLA 250, whatever, is that the year is much more important in, at least for this algorithm, in predicting the price and the mileage, as around 63% of of the feature importance. And then I just created a quick function where you can input your year and mileage and kind of see what or and then use the algorithm to predict what the price should be. So for this, just like this case study, this isn't the car I bought, but I would just put in, you know, um, 2019 and 72,000, which I did here, and get a fair value of 19,670. And then I want to figure out exactly like how much I expect it to be worth in the future. So if I drive it 12,000 miles a year, how much will it be worth in 2 years if I try and sell it? And the method I use for that is basically saying that a 2019 model next year is worth the same as a 2018 model is worth this year, if that makes sense, because a new model will come out and I expect the value to shift over 1 year, similar to how iPhones do, which isn't necessarily always the case, but I feel like that's the best way to do it. And nothing has to be perfect. This is just an estimate and trying to figure out like an estimate on how much value your car will lose. So here it shows how much it'll lose every year, the price, and this is based on a new mileage of 12,000 or plus 12,000 every year. So once it gets to the fifth year, it's at 132,000 this car if I were to drive it 12,000 miles a year, if that makes sense. So something to be cautious of is that, at least for this car, the earliest model was a 2014 model. So if I did put in like a 2015 or 2016 model, I would only have data for 2 years because you want to keep the prediction models are only accurate in the range of the data set. So since there's nothing for 2013, it's using that to try and predict the price, which will be crazy inaccurate. So then once you have that, the two cars I'm comparing just for this case study is the C117 because that's the car I bought, the car I like, and then just like a Tesla Model 3 and a base, like the cheapest lease I could find is on a Nissan Sentra, so I just compared it to that. All right. So here I make like a few assumptions. So the risk-free rate is 5%, interest rate on a loan is 7%, gas is $3.17. The dealer markup is basically how much. So when I sell the car to a dealer, I should get 15% less than what they're gonna charge for it. So the prices in the data set are 15% more than what I'll get for it, if that makes sense. Sales tax, title registration, and then the effective tax rate. This is obviously variable. For me, I just did it for my business, so it's 21%. But obviously, if you run a sole proprietor or you just have W-2 income, then this wouldn't even be valid. This is just for write-offs. So how I came up with these values. Oh, so first, this is the price that I paid or that I'm looking at for these two different cars that I just put in to the algorithm. And then this is just 229 a month. This is the cheapest lease I could find. And so here is the initial cash flow that you lose the first day that you get it. So for this example, I just paid cash, or I will be like theoretically paying cash for these cars, just because interest rates are high. I don't expect too many people to be taking auto loans, but if that is something that you want to do, you could go through the amortization formula in Excel and do that fairly simply. And then here was the due at signing for the Sentra. Then the mileage, I just standardized it for 134 for the Model 3. But obviously, if you wanted to be more specific, you could figure out the exact electricity costs and how many kilowatts it takes to charge and how many times you're going to supercharge, stuff like that. The maintenance, I used a website called like repairpal.com, but honestly, in my experience, a lot of people say that the more luxury car brands cost a lot to maintain, and that is true if you go to the dealer and do exactly what they tell you to. But you don't honestly have to do that. If you know how to do some of this stuff yourself, that's really helpful. If you go to third parties, they can do it for much cheaper. But for this example, I'm just going to use repairpal.com and the estimates they give. Insurance is biannual, so two times a year is how much you're gonna pay. You could get exact quotes if you have the VIN and call your insurance company if you have exact cars that you want to purchase. But for this example, I just put in numbers that are fairly accurate for me at least, since I'm very young. And then so here I calculated the price that I would pay times the sales tax plus the title and registration fees. For the Tesla, I also included a $4,000 EV tax credit that you get for used cars, a federal tax credit. If you live in a like a more Democrat, a more blue state, you get more state tax credits if you make a certain amount or under a certain amount. And same thing with the federal tax credit. I think it's under 150K if you make household, under 112 if you're single, then you get a $4,000 EV tax credit straight to your paycheck. But you also have to pay $4,000 in taxes for that to be, free money. And the same thing with the states. You just have to look up your state's EV policies, their tax policies around that. So yeah, same thing. Times sales tax plus title and registration, and then right away I get a $4,000 tax credit. The Sentra is just the due at signing, and then here is the how many miles you're gonna drive per year divided by the mileage will be how many gallons you spend or how many gallons you use per year times the price of gas, and then plus maintenance, and then times plus insurance times two since it's annually. That twice, you get the same value twice. And then the expected value when you sell the car. So that's what you get from the algorithm that you create. Um, yeah. And then here, you just add all of these up. So you lose 21,000, you lose 3,200, and then once you sell, you get this much. And then this is also, oh yeah, I forgot. This is one minus the times one minus the dealer's markup, so 15%. So it's 85% of what the dealer will sell it for, which I think 15% is pretty fair, but some people would, for cars that are cheaper, I think it would be like 23, 25%. That's typically the markup, and then how much this would come out to monthly. So here, the Tesla depreciates really little in this model, in this example. It still loses value, but what's really helping is that $4,000 EV tax credit, which you only get every few years. And if you needed another car after 2 years, you'd have to do this again, and you wouldn't get that EV tax credit then. So yeah, this is a basic model of how you can figure out exactly like how much you're gonna spend on a car. And if you run through a bunch of different, if you do this correctly and you find a really good deal and you're good at negotiating, and if you have a little bit of car knowledge, you can find cars that have like a few issues that are really easy to fix, that you can fix yourself. Might not be necessarily easy to fix, but that you can like look up a YouTube video and fix yourself. You can find really good deals and figure out and just really minimize your liability, especially in the depreciation status. This will always be the same. Something to add on is that if you do run a business, a sole proprietor or a side hustle or something like that, you do get tax credits. I didn't include that in this, or tax write-offs. Credits is only the EV tax credits. I didn't include that for this because it won't really differ for each car that you have, if that makes sense. Like it's going to be the same no matter what. It's so standard deduction for tax write-offs right now is 65 cents per mile driven. So it'd just be 65 cents times 12,000, which is, I don't know, 7,500 or something like that. And that would be the same for each. And then that times your effective tax rate, because you're not going to pay $7,500 in taxes, so you save 21% of that. I didn't include that in this because it would be the same for each one of the cars. One thing you can include is if you are going with a lease, you want to include the risk-free rate that you get. So if you have $20,000 liquid, you could get 5% on that, and that would chip away at this. And then here you have a big opportunity cost because you spent $20,000 right away. You don't have that. You don't earn any interest on that. So yeah, that's something else you can include. So yeah, if you look really hard, you can find good deals, and if those are under your expected value after 2 years, you can expect to pay really little on some of these cars, which I was fortunate enough to do just a few months ago, which I hope that after 2 years it won't depreciate as much. Another thing that you could do is go on Carvana and look up the VIN. If you get like a similar value, Carvana really underpays for cars. So if you get like a similar value, that's like a really good indicator that you're getting a good deal. It'll never really be under whatever Carvana pays, because then the dealer would just sell it to them. Why would they try and sell it to you for a price lower? That never makes sense. So yeah, another thing that you could do if you really wanted to is, I couldn't find a good API for something like Carfax. Carfax doesn't offer an API. I don't think Cars.com does either. I think Car Gurus might. Basically, what you could try and do is, instead of inputting all of this data manually, which I had to do for 15 different models, which is really annoying, you could try and scrape every single car on the website within like 100-mile radius, and then run it through using Selenium or something like that, or Beautiful Soup, and then run it through this machine learning algorithm and figure out which cars would depreciate the least, which cars have the best deals, and then yeah, and then also a lot of dealers are really shady, so you want to make sure that you want to, for at least for used cars, that you either take it to the dealer or a mechanic and get it checked out, or if you know enough about it, just make sure everything's good with it, because you would lose a lot of value if something goes wrong with the car, like an engine failure. That's not included in this maintenance cost. Everything has to be, you know, pretty good. Something other than stuff that insurance covers. If you're gonna crash, insurance covers that. You won't lose as much value. So yeah, that's really it. Uh, I'm sorry it's a little bit messy. I should have worked harder to try and make it more organized, more just make it easier to read some of these models. Maybe I'll do that and create another video sometime soon. But if you guys have any questions, just drop them in the comments. And yeah, that's really it.